My name is Adonis Adoni, and I'm the news editor for Finance Magnates, and this is FM Talks. And today we are talking about wallets, what we know, what we don't know, and where we're heading. To do that, we have two guests from Paysafe. Bob Legters is the Chief Product Officer, and Jeannie is the VP of Sales and Relationship Management for Forex and financial trading. Jeannie, Bob, thank you for joining us.
Thank you for
Glad to be
having
here.
us.
Thank you.
Now, I was debating a bit with myself, as one does, whether I needed to introduce Paysafe, a bit of an intro, given how much market share Skrill and Neteller have with brokers and prop firms. And then it hit me that about 10 years ago, when I was working in the cloud computing business, the consumer side had really no idea that they were using cloud services. They just knew that their apps worked. So I'm wondering, do wallets share that same invincible ubiquity? Bob, what do you think?
I think they actually do. As a matter of fact, I think most consumers would open up their phone and realize, oh my gosh, I'm already participating in 10 wallets. And anytime that you're storing your financial credentials or using a tool, a great example would be coffee drinkers oftentimes belong to an app that's a copy. And what do you know? They have a wallet where they're holding funds or they're loading funds and using those to purchase coffee at whether it's a Dunkin' Donuts or a Starbucks or any of the other chains that are out there. And that's a version of the wallet. And all of those sit on top of a payments infrastructure. Any wallet that doesn't sit on that infrastructure is not a good wallet. And so I think you're right. They do benefit from the cloud. They benefit from the regulation. They benefit from all of the infrastructure that's been built over the last 50 years to interconnect and protect the customer's purchase and do all those things. So I think they do benefit from that without really fully knowing just how plugged into the financial system a wallet is. A lot of times it can feel like, oh, the wallet is completely separate from anything to do with banking and anything to do with completely untrue, all very much regulated by money movement licensing and all of those. So I think the wallet is as a financial alternative that a lot of people don't realize participates in the cloud, both virtually and kind of practically in the cloud of regulatory and safety and security and all those benefits. So I think you're right.
Now, that's a great segue because I think we have sailed from the point where wallets are just a faster rail. Now they have a lot more benefits. So, Jeannie, I was wondering if you can tell me what are the least talked about values that they bring to the industry right now?
And you're right, like wallets have always made funding accounts and withdrawals very simple, and that role isn't going away. So if anything, it's becoming more important than ever. So, but today wallets are core infrastructure, not just a payment option. So they help brokers improve deposit success, reduce fraud, and scale internationally. They also simplify operations. So instead of integrating local payment options one by one, so you've got Pix in Brazil or Ideal in Netherlands, brokers can offer one single seamless experience to traders globally. And if I take one step further with white label capabilities, brokers can own the entire trader journey. So from deposits to withdrawals to multi-asset management, which directly drives retention and lifetime value. So in a nutshell, I think wallets are no longer just moving money. They are really shaping the competitiveness of brokers.
And on the other side, on the consumer side, the traders, you are sitting on a mountain of transactional data as Paysafe. So, based on the 2025-2026 readout, how has the traders, let's say, behavioral signature evolved compared to 5 years ago? Bob, if you want to take this.
Yeah, sure. Glad to jump in. I would definitely say because the wallet has evolved to offer so much more than just moving money back and forth, the traders are starting to look at the wallet as a financial tool that helps with using funds beyond trading, alternative payment method integration, so that they're able to offer more flexibility to the network that they work within. They also, I mean, one of the big benefits of wallets that goes unrealized is there's tons of risk controls on a wallet. There's a lot of unified layer of local payment methods. Bring all that together so you're not enrolling in 50 different ways to pay, so that you can work with your network across multiple countries, or even a network within the same country. We were talking about London earlier as such a great melting pot for financial services. London is one of those places where you might be dealing in 10 currencies and you're dealing with people that are less than a mile away from you. And so it's really critical to look at that infrastructure. And I think the traders are starting to look at that and say, wait a second, this isn't just a way to get money in and out. It's not just a way to ensure fast movement of money, but also now I can start offering different services and connect those services to the wallet in more real time. And so we've seen a lot of that with working with crypto, as traders start looking at alternative revenue streams and alternative money movement, crypto, all the other LPMs, putting all those things together just allows them to come up with new products and services that are close to the trading, but don't necessarily always have to be trading.
Now, you mentioned the local payment methods, and from a casual observer, it looks like the global payments map is a bit of like a Jackson Pollock painting. It's a bit confusing. So, do you see that as a threat to wallets, or is it an opportunity?
So first off, I'm absolutely going to use that line when I describe the payments network, because there could be no better description of it. It is absolutely a Jackson Pollock painting, but I do see it as an opportunity, because the more complex that it gets, the more that the wallet allows for simplification, and the more what a trader doesn't want to have to do is keep up with 179 different payment methods and make sure that they understand the nuances of all of them and the regulatory requirements and the limits and kind of the daily interactions. Every local payment method has at least one and potentially two changes to the API that connects with them every year. So the more complex it gets, the more you need somebody that makes all that simple. They sometimes you don't want to know how to watch works. You just want to be able to tell what time it is. And that's what we do a lot for our customers, is we simplify all that on the back end so that they can just use the wallet and all of those pieces work. And you don't have to worry about keeping up with the infrastructure of your system to be able to manage the industry that you're in. And so we see it completely as an opportunity, and more of those LPMs are showing up. And even when they become super popular in a region and they kind of launch their own wallets and things, moving money from a wallet to a wallet is very common, right? Most people don't choose a single wallet to do all financial activity from. And so a lot of times I work in one wallet, someone in my network might work in another. So we don't have a problem. The kind of co-opetition version of wallets working together is very common. And if you look in the terms and conditions of most, you'll see lots of the names that you think are competing actually partnering to make things easier for the customer.
That's very interesting. Co-opetition then.
Yes.
Okay, let's pivot to arguably the most exciting innovation that came out of the crypto space, which is stablecoins. A few years ago, the narrative around stablecoin payments was that was strictly budget friendly. They were shaving off money from wire transfers. So where are we now? Jeannie, what's the narrative now about stablecoin payments in the trading business?
So, I mean, we have been supporting crypto for nearly a decade. So we have front row seat in terms of adoption trends in stablecoins as well. So the appetite, it's clearly there. I think transaction volume reached around 33 trillion in 2025, which shows how mainstream they have become. That being said, the most activity today is still very much linked to kind of liquidity management or trading. So the real world payments are still relatively small. So I think around 7% of total usage at the moment. But they are growing fast. So particularly into the B2B space, remittances, and high value cross-border transactions. So what we are really seeing is stablecoin gradually evolving from a trading tool into a genuine payment rails.
Do you
Yeah,
think that? Yeah, sure.
sorry,
Sorry.
I was just going to add a little bit to that because I think if you're standing in the middle of where stablecoin is and looking kind of in the middle of the crowd of active stablecoin usage, it looks like a rocket ship, right? I mean, it's growing at a ridiculous rate. If you back up and you're a payments in the payments processing space like we are, and you see trillions of dollars in transactions, you say, okay, where's stablecoin in that? What we see is that growth to 7% is a rocket ship within that ecosystem, but it's still gaining traction from an everyday use standpoint. The majority of the stablecoin use cases we see, especially in trading, are just that they're being able to do cross border and hold before they make transfers. It's great liquidity management, and we're seeing a lot of interest and growth in that space that I think is really helping kind of fuel why a wallet is so valuable, because your payment method and your stablecoin serve two different purposes. So if you're on an LPM in a country so that you can move money quickly, and you're holding a stablecoin for liquidity management, somewhere that you can see and manage both of those is really convenient and really helpful. And so we see a lot of growing interest in that. And then as it moves into mainstream transacting, that's fantastic for us because the wallet can facilitate that.
And now we're watching more and more brokers essentially beaming directly to traders, whether that's USDC or USDT. Do you see that as a genuine threat? What do you think, Jeannie?
Far from being a threat, I think. I think stablecoin rails, if anything, reinforce the role of a wallet, because the rails doesn't provide identity verification, there's no fraud controls, there's no dispute management, and that's where wallets fills in the gap. So if we look at from a trader's perspective, they want multi-asset flexibility. So they want to move between fiat, crypto, and trading balances, and that's where wallets steps in and be a trusted interface that really make that happen. So I don't think it's a threat. I think we work alongside together. If anything, it strengthens the role of digital wallets rather than replacing the rails.
What would you say is the next step that will allow that 7% to become 20%, maybe 30%? Is it regulatory alignment? Because right now have so many rule books across so many different regions. Is it something else?
I definitely think that regulatory alignment is going to help, because I think a lot of consumers and a lot of even businesses, merchants, traders, etc., look to the regulators to say, how much of my business am I going to have questions about, or am I going to deal with the regulatory side of? Because regulation is great for making sure there's protections in the market. It can be challenging because of the burden that it puts on an individual to have to report and track and do all these things. So I would say that as that evolves, you will see a greater need. Right now, the big question is how you get paid is how you spend. So as I receive funds from one income stream, I want to be able to use those funds to buy the things that are necessary in my life. And so when we talk about getting into gas and grocery and restaurant and regular purchases with crypto and stablecoin, what you say is, if you're taking your income stream and you're moving it into another asset type and then moving it out of that asset type to make a payment, for that to really gain traction, what you need is acceptance of that asset type as a payment at all those retail locations, or you need something that helps translate that. So the ability to pay with stablecoin, pay with crypto, is growing immensely right now. But it still begs the question, is that where your income stream is coming from? Because if it's coming from there, then it's going to be convenient. It's going to grow a lot. If it's coming from somewhere else, going into there and then coming out of there, that's where we see the lag, is that a lot of people that are in the stablecoin space are in the stablecoin space for one part of their financial planning. They're not actually looking for stablecoin to be the way that they live with financials. They're looking at stablecoin in a certain way. There is certainly a group of people that would love it if everything was happening in the coin, and not just with stable, with like USD or Tether or those others. And as those groups grow, acceptance will grow, right? Retailers don't want to turn anybody away. As a matter of fact, an interesting fact: no payment method that's ever been introduced has ever retired. Right? We still take checks in most places in the world. There's still cash. There's still all these things. And while those things are getting strained, it's really hard for businesses to say no to someone with money coming their way, right? And so I do think getting adoption into the mainstream requires a little bit of that acceptance and a little bit of the need of the financial to be more of a primary financial tool for the consumer. And that's, I think, growing. On the business side, this is where we see great opportunity, because on the business side, moving money between businesses, paying vendors, paying suppliers, those things can happen in the coin, and you can get acceptance there quite a bit easier than you can get it for everyday consumer transactions, because there's such variety in those spaces. So we're seeing a lot of activity in the B2B side, and we see a lot of what I'll call passion on the consumer side. Right? They'd love to see it grow. It's exciting to use, but it's not so much. It's more of the acceptance network and kind of the income stream on that side. It's definitely fun to watch for sure.
And it's gonna take time. Cards, I think they have been around for 70 years.
Yep.
So stablecoin payments are very new. They're just nonsense babies compared to other systems,
Yeah.
and they are gaining traction. So yeah.
Yeah.
Okay, now I also want to pull on a thread that's been weaving through every layer of the technology stack and in every conversation, generative AI. I'm wondering, how are they changing the wallet infrastructure? Jeannie, do you have any thoughts on that?
I personally think Gen AI, it's going to be a game changer. But there's always two sides to a coin, right? So on the opportunity side, I think it allows smarter personalization, better fraud detection, more predictive funding flows, and faster onboarding, et cetera, et cetera. But on the flip side, AI-driven identity fraud has been on the rise. And because digital wallets, we sit at the center of high value trading flows. So we are the ones that kind of need to really hone into, okay, what's happening, what are the automated attack patterns that's coming up. So I think we are actually going to be the first in the fintech system to really fully operationalize AI, but that's just my opinion. Bob, what do you think?
Well, yeah, I can definitely support the fact that on the AI side, and we can talk in a number of different ways, because AI is interpreted. If you really want to do a fun thing, ask an AI to describe AI, and every one of them describes AI differently. It's great, but it's certainly the place we started with a lot of the AI and quantum and those type of things is, how do we protect the customer more, right? There's nothing more sacred than a customer's wealth and their money. And so how are we using AI on the protection side? I think Jeannie's right. The game changer is going to be in the user experience, in optimizing the flow, being there when the customer is ready to make a transaction, when they do something, being ready with the next step automatically. A lot of that is an AI user interface and AI support. When we talk about the risk of fraud and criminal activity, it is at an all-time high and will likely only go higher, because now their tools are much more sophisticated as well. And so it's a minimum requirement of infrastructure. So we're at, I think, around 30% of our code build is happening in AI already. And growing quickly. And that's across multiple products, not just the wallets. And the reason for that is simple, right? We need to streamline that development so that we can move faster. And then it always comes the same way. How much fraud protection do you put on before you start to make the hotel feel like a prison? And that's what we don't want to do to the customers, right? Constrict them. But it is harder. But that AI identity theft is becoming a massive concern in the market. And we're doing a lot, working with a lot of partners. There's no one stops fraud on their own. it is absolutely an effort that takes everybody, including the trader, including the consumer and the merchant, and all of those. And I think everybody's much more aware of that.
I was reading last year about an AI researcher working at a cybersecurity firm called Cado Networks. I think it was Cado Networks, yeah. And he convinced ChatGPT to create malware by telling it that everything was happening in a fictional world. So
Mm,
even with these consumer-led LLMs, even with the guardrails that they have, you can, if you are, creative
yeah,
enough, you can sidestep them, and anyone now can be a hacker. Which, yeah, is I'm not surprised that AI identity theft is up there with the greatest landmines.
yeah. Yep. It's definitely it's the more that we see it, and it's those type of things, that kind of creative, non-intentional, of like, fire is fuel, but it's also a weapon, and those are the types of things that we have to consider. So our approach is always to make sure it's got to be secure first, right? If you lose the trust of the trader, the customer, and so I think sometimes in the market people will see greater restrictions and greater limits and double checks, and that initial frustration will be there. But once they're touched by it, right, once somebody gets to your account and makes a trade or takes money out of your account, they certainly, the understanding grows. And so we work pretty hard to focus on the low impact but high security.
Okay. Uh, okay, so we've dissected data, we talked about stable coins, the algorithmic ghost in the machine, but I want to wrap this conversation up by looking past into the horizon. If we are sitting here a few years from now, what will be the seismic shift that we are currently treating as a footnote in the wallet pipeline? Jeannie, what do you think?
I would like to see wallets evolving deeper into the compliance and risk infrastructure of the brokers, because from a digital wallet perspective, we have to KYC our customers, and obviously from a broker perspective, they have to do the same as well. So there's a lot of crossover, and I want to see what's going to happen in that space. So for digital wallets to help brokers operate across multiple regulatory environments. I think we will see a stronger integration between fiat, crypto, and even tokenized assets, where a lot of
Mm-hmm.
people and brokers are talking about. So I would love to see how wallets really transformed the area and became a true financial hub, as we call it. And finally, I think we're going to see more brokers and prop firms launching their own branded wallet ecosystem, giving them greater control over the customer relationship and long-term engagement.
Can you expand a little bit about the branded wallet? What do you mean by that?
So basically, it's the white label capability. So having a digital wallet, we replicate that and brand it into a different name. So the broker or prop firm will have full functionality of a digital wallet without having too much development work that they need to do on their end, but they will have the true trader or prop challenge trader, the whole, what's the word I'm looking for? Ecosystem
Ecosystem.
and the whole journey. So from deposit to withdrawals to the UX, for example. So giving them all the focus they need to do to even build a loyalty program where traders can earn points, for example. So just giving them greater control over the whole customer relationship and the engagement part.
So we
And
become in that example, that's a great example, Jeannie, because that's something that we do today where we offer the entire platform and all the functionality and infrastructure, and then it's branded for specifically for the trader or the prop firm, so that they control the experience, and there's no feel like you're handing it off or that you're using other tools, but they get the benefit of all of our experience and all of the security protections and all of the KYC and regulatory management without having to build an entire group around it. so they can be specialists in their area and offer a full financial services tool and be able to customize it without a challenge. And then we oversee all of that as the e-money license manager and ultimately as having all that infrastructure. Doing it for ourselves or doing it for our customers or doing it for someone who does it for their customers becomes an easy extension of that.
Okay, so white labeling is going to be a big thing in a few years.
Yeah, I think actually it's a thing we're seeing lots of interest in right now. And if I forecast, if I do the same thing and I looked far enough down the road, there's an old saying in the future: if you look far enough down the road goes away, right? Because we won't need the road anymore. And I think of the trader as the beginning of what the future will be, right? There's only two types of money in the world for all the currencies and LPMs and everything. Two types of money: money you have, assets, cash, investments, equity, and money you don't, right? The money that you borrow, the risk that you take, the float that you own. And those two things being managed by a wallet using AI can tell you the best way to make a purchase and move money in your world. And that might be that I decide to buy a car and I trade crypto and it makes the car purchase and moves it through an LPM to the car dealership. And all that happens automatically behind the scenes. So when you think about your total net worth from assets and your total available risk from a credit quality, both being leveraged in real time through a wallet, then you're just making the decision about what you want. And all of those decisions, you don't have to be a financial expert. That's what the wallet does for you. So we see that as the evolution of what the wallet can do. And by white labeling it for clients to make available to their customers and offering it directly to customers, we think we can fuel a new economy that blurs the lines between all of that in the background, which is pretty exciting.
Great. Guys, I think that's a very good note to wrap up this conversation. It was great talking to both of you, and thank you so much for your time.
Thank
It was a
you.
pleasure. Thank you.